I'm really happy that you all are here today. So let's just dive right in. So DC housing policy wonks are all abuzz this week because last week's State of the Union focused on housing in a way that it hadn't done so in a very, very long time, certainly in recent memory. There were a lot of proposals that were put forth by the president in his State of the Union. So I'd like to start the conversation today by maybe talking about some of those proposals, unpacking them a little bit, and seeing what folks might think about them, and also what might be missing that we'd like to contribute, because I'll note that the State of the Union is sort of like, it's an opening bid. This is the beginning of what I hope will be a very rigorous debate around housing policy this election year. So Jason, I'd love to start with you. There were some proposals in the President's State of the Union that, to support both buyers as well as some sellers. I'd love to hear what you think of some of those proposals that were put forth.
Absolutely. Well, thank you so much for being here, Laura. As you mentioned, it's great to have a partner like yourself and continue this work that we're doing together. And Kara as well. So Falcone also represents NAREP and has been a tremendous advisor. So I'm not a policy wonk. I really just kind of call Kara and I'm like, can you give me the high level points here so that I sound educated enough to kind of talk to this. But I think what we heard from the administration, I'll tell you that we really haven't had we just released obviously our policy priorities for the year. I think for us, rather to, so this is not an official statement because we have not had an opportunity to really kind of do a deep dive on some of those proposals, but I can tell you, I think our way of thinking in terms of how we evaluate proposals such as these is that, of course, we take it through the lens of sustainability. And if you look at our policy priorities, I think very few of them really hit on in terms of maybe some additional, funding, and when it comes to down payment assistance. We know that there's a lot of activity already out there in the marketplace. So for us, it's really, what are the long-term, really kind of policy goals that we can reach at instead of just, these these suggested types of opportunities, whether it's, throwing some additional money at down payment or the tax credit. I think that there's much more there that can be done sustainably. I think through the tax code. I mean, I'm very interested personally in seeing what can happen from the capital gains tax to kind of move some of that inventory that's kind of locked up for people, that are seeking. So when I look through these things, I think for us is to say, it's great. I like that there's conversation around housing, but I'm not sure if it's something that I would think would be a sustainable long-term kind of program that kind of we're looking for as an organization. So.
Great. Yeah. Well, thank you. Yeah, no, thank you for that overview. So, Mike, there were also some proposals to address more the supply issues, because I think there's been a lot of conversation there. What is the number one challenge right now is finding, inventory of affordable homes, particularly for first-time home buyers. What are your thoughts around what was proposed? What maybe you would add if you had been writing the speech or designing the proposals? Any thoughts on what was out there?
Yeah, there were a couple of really exciting components of the proposal that the president laid out in State of the Union last week. First and foremost, for those of you in markets that have experienced disinvestment over the past several decades, important component is the Neighborhood Homes Investment Act, the Neighborhood Homes Credit, which really seeks to address the appraisal gap. Which is to say the difference in the exit or sell price value of a home and what it would cost to take a dilapidated house and put it back into service. And so this program would function much like the housing credit, where it would provide an allocation of federal tax credits to create equity that would fill that gap and make it possible for neighborhood and community revitalization efforts in communities around the country, from Western Pennsylvania to Buffalo to communities out to the Midwest and even into the Intermountain West. So we're excited about this program. We're excited about this idea. It has been a legislative proposal moving through Congress for the past several years, socialized with bipartisan support. Really exciting to see that the administration is continuing to put its voice behind this program and stands to create many more starter homes, which of course is a significant impediment to Latino homeownership as well as homeownership at large. A second proposal that we're quite excited about as well is this proposed $20 billion appropriation to a housing innovation program, which is really a smorgasbord of a few different policy proposals that have been floated here in DC over the past several years, from the Pro-Housing Grant Program, providing technical support and resources for community engagement for local-driven zoning and land use and housing production policy work, to investments in modular and other cutting-edge building means and methods to try to bend the cost curve and make it possible for housing producers to really meet the market where it is. I mean, historically, as we look back over the past 20, 30 years, we have seen a significant diminishment in the availability of so-called starter homes, right? And that has significantly, in addition to cost burdening, has really significantly contributed to the barriers to home ownership. So we think that with a keen focus on production and preservation, the administration proposals are quite exciting for home ownership opportunities across the country.
Great, thank you. So, Karis, there's a lot there, right? And these are proposals. It's not like today or tomorrow, next week, that they get enacted. But there's kind of a mix. Some would require legislation, some regulation, and none of that is easy. So I'd love to hear from you, on maybe kind of some of the regulatory proposals, but also just kind of big picture, like what are we looking at here? Like what would it take to make some of these proposals a reality, and what's sort of that process?
Sure. So the gestation period for some of the legislative proposals we heard in State of the Union is going to take a little while. But I do have a good news story for something that you all in this room have been working on very hard for a long time is coming to fruition. So back in 2018, this very same policy proposal document asked for credit score updates or credit score model updates, and that's coming to fruition thanks to your patience, persistence here in Q4. So finally, the pale and stale old FICO models are going to be updated with something that's more reflective of the demographics and the population in the United States today. So it's something to congratulate yourselves on. Yeah, well done. I think as we go into an election year, I think we're going to continue to talk about what the tax code can do to change the way that home ownership is treated, even the way that we pay state and local taxes, but be patient here. This legislation may take a little bit of time.
Yeah, I think that's very fair. So thank you. So we were talking about, some big ideas and kind of what the road, the journey might look like to getting there. But let's talk about what's happening today, or what has happened kind of more recently. So I'd love to turn to you, Sarah. And we know that Latinos are about twice as likely to get an FHA loan than any other type of loan. And so what is FHA doing to achieve that? And what are some of the works that you're doing in the Office of Single Family Housing to ensure equitable access to mortgage financing for different communities, including Latinos?
Great, thank you. And it's just wonderful to be here with you all. Our program does not work without all of you, so thank you for your partnership, for educating borrowers about FHA, for holding us accountable when there are things about our program that should be changed, and just your partnership overall. I'm going to highlight a few things that we have done over the past year or are currently working on that we think is already moving the needle or will move the needle. First, and I'm sure you heard Commissioner Gordon tout this yesterday, but the reduction in the mortgage insurance premium that we rolled out last year has already served about 680,000 borrowers who in their first year of home ownership saved about close to $900 in that first year. So that is real money. It also helped folks qualify for a loan who might not have. So we're very, very pleased with the ways in which that has moved the needle in this very difficult market. The other thing that I want to highlight, at the end of 2022, we rolled out the ability for borrowers to use positive rental history to help them qualify for a mortgage. This is particularly important for thin file borrowers or folks with very low credit scores. And we have seen some really impressive gains. Our economists put out a report at the end of the summer, and we are on track, if the trends persist, for this change to help qualify about 5,600 new borrowers each year, which is $1.2 billion in volume of folks who would not have been approved through our automated process were it not for us being able to count their positive rental income. The other item I want to touch on really quick is that we are, like our GSE brethren, looking at alternative credit score models. We are in the process of doing some analysis, and I know that's something that has been on folks' mind, and we are actively working on that. On the supply side, because we can do all we want to open up credit, but if you don't have any houses to sell, we're not moving the needle in the way that we want. And so I want to highlight just a couple of areas of focus. One is the 203K program, our rehab program, and there's going to be a panel at 11 on that where we're going to dive in deeper. But we put out a slew of proposed changes at the end of last year to basically make that program more usable for borrowers, easier to use for lenders. And this, I think, is particularly important for Latino households. The NAREB report pointed out that Latino households, there's huge opportunities in lower cost markets for Latino borrowers. And a lot of those homes are in older markets where homes need work. I mean, look, in this country, the average age of a home is, I think, it's over 40. It might be 43. I'm 43 years old. I'm going to tell you, things start to break in your 40s. You need to continue to be investing in those homes. And so we got to get this product back and working. The other item, and I believe the commissioner touched on this yesterday, Title I. So this is probably, many of you might not be focused on manufactured housing, but Latino borrowers are far more represented in personal property MH loans. So that is, they're buying the home, but they don't own the manufactured home, but they don't own the land underneath. 1 in 5 of these loans is made to a Latino borrower. And the state of the market today, there's very little consumer choice. It's very difficult to shop for a mortgage. FHA has a program, has an offering that hasn't been used for many, many years because our loan limits were way too low. It did not reflect the market. So we've also increased those, and we are rolling out more details about that tomorrow. And then the last item, because I know I'm burning some time here, just because the congressman hit on this, assumable mortgages. We are looking at our fees. We've heard from you all. We've heard from many stakeholders, and we're looking to try and update our fees so that can be a tool that is more readily accessible to your borrowers.
That's great.
Yep.
That's a lot of work going on. Really exciting. Thank you for what you and your staff are doing. So I'd like to maybe pivot back to a little bit we talked about earlier on the supply, because I know that's been such a big theme just generally recently, but especially the last couple of days. And Mike, your organization Up for Growth, you founded it 6 years ago specifically to look at the housing production and the supply challenges facing the country. So I'd like to ask you kind of a two-part question. One is maybe to start with, giving us kind of a sense, both nationally and regionally. We hear a lot about housing underproduction, but what are the numbers? What does that mean, across the country and maybe in some specific places across? And then what are some of the specific policies that Up for Growth advocates for to resolve some of these challenges?
Great. Well, thank you, Laura, for the question. And just to echo what the Deputy Assistant Secretary said, right? As much we can drive into down payment assistance and homeownership subsidy, and as much as we can do to improve the lending products available to homebuyers and first-time homebuyers in particular, that doesn't matter if we don't have enough inventory on the streets. And so Up for Growth was really formed recognizing that we have a severe gap between the housing that we have and the housing we need in our communities, and that gap continues to grow. So we have quantified that shortage, what we call underproduction, on a longitudinal time horizon through our data, and you can access it on our website at upforgrowth.org. And we have found that from 2012 to today, the gap has more than doubled from a shortage of 1.6 million missing homes in 2012 to 3.9 million missing homes as of data from 2021, and that gap continues to grow. More so, we have seen a significant shift in the shortage proportionately away from, to some extent, California, which represented nearly half of the national shortage back in 2012, to now significant shortfalls in places like Texas, in places like Florida. In fact, we performed an analysis with the NAREP team a couple of years ago, looking at the top 10 Latino markets across the United States, and found that those top 10 markets are the places, in fact, with the greatest severity of a housing shortage. Again, places like California, Florida, and Texas, Illinois, and many other Latino communities. And so the shortage is a pressing challenge, but the character of that shortage has transformed again, particularly in the years following the onset of the pandemic. And so we now have huge deficits accumulating in the Southeast US in particular. So in terms of policies, it's really a twofold approach from our perspective. It is breaking down those artificial and often exclusionary policies and patterns and practices that have not only perpetuated the shortage, but limit the types of homes that can be delivered, including the absence of starter homes. And number two, it's driving more resources into production and preservation, particularly, which is, again, why it's so important and encouraging to see the administration and members of Congress across the aisle really leaning into appropriating more resources for, again, production and preservation.
Awesome, great, thank you. So Kara, you sit in a unique seat because advising in the government and private firms around regulatory and housing matters. I imagine you can appreciate kind of that balance of consumer protection, safety and soundness, financial stability. So I'd love to hear from you. What are some of the policy proposals that either are out there now or that you think we should be looking at more closely that would help us address some of the challenges to growing Latino homeownership that still take into really central consideration the balance between consumer protection, financial stability, safety and soundness of the market? Because at the end of the day, if we don't have a safe and sound financial housing market, we're in trouble more broadly and consumers are in trouble. So we need to make sure all of it kind of works together.
Yeah, I appreciate that question. I mean, we always talk about how important it is to put people into sustainable mortgages. Exploding mortgages and balloons and the sorts of products that we became aware of in the early 2000s, luckily have been kind of washed from the market. So there's new opportunity for credit availability now, and I just had a moment to share with you guys about the credit score model updates. That's moving things in the right direction for a better understanding of how people that aren't necessarily W-2 borrowers that rely on FICO scores can qualify for a mortgage. Very recently, Fannie Mae released its information that it's going to be doing something called single verification resource, meaning that they're edging ever closer to doing bank statement underwriting. Now, whether if that's going to be available to self-employed borrowers is still kind of in the sauce here as we go through it. But what they're looking at is cash flow analysis. If looking at the way that a family or a home buyer would work through their monthly budget and figuring out if home ownership is possible for them is a significant upgrade over where we used to live, which was sort of backwards looking at your W-2 tax filings and FICO scores. I did want to share with you a little bit of a cautionary note that's not as positive as I wish it would be. But when I think about opportunities and threats for Hispanic homeownership, I'm looking at the sort of legal challenges that are happening right now. Jason will probably be able to share with you a lot more on what NAREP is doing here. But the threat of these NAR lawsuits and the new equilibrium that'll be resulting from them is something that I think the industry is still looking to innovate on. And as we at Falcon Capital Advisors talk to our clients, clients, we're listening and seeing everyone try to edge into finding ways to continue to compensate the buyer's agent and recognizing that they serve a significantly important aspect of the home buying process for their borrowers. There was this Redfin study a couple of months ago that said like 80% of home buyers reported crying during the home buying process. I mean, come on, if that's not like a very strong advocate for buyer's agents, I don't know what is. Redfin study, you can Google it now, you'll find it. Redfin crying homeowners, question mark? But the part that sort of makes me worry is what's happening outside public policy in the sort of democratic and republic process, and it's the challenge to the Community Reinvestment Act rules that have historically helped underserved communities increase home ownership and address historic redlining. There's a challenge to the implementation of the new rules down in Texas courts. Same thing sort of happening across the country as we look at the challenges to special purpose credit programs and programs that would ideally help Latino homeowners and home buyers kind of get a leg up in processes. The challenge and the reaction to these woke capitalism the policies are sort of kind of backwards thinking when we think about all the progress we've made in addressing historical redlining and increasing wealth opportunities for Hispanic folks. So that's a long way of answering a short question, which is what are we watching at Falcon Capital Advisors? And we're always very interested in access to credit issues and innovations on ways to like maybe think about AI or machine learning or understanding a better way of how people use credit. We're very interested in how to build more houses and make those houses available to folks who are going to buy a $300,000 house. Those just aren't on the market right now. And then last, we're also very interested in making improvements to the house for multi-generational living. So the 203K program at FHA is incredibly important. Like how do you bring in ADUs or fix up your basement or add on to your home so that you guys can all live together in a family unit and stay that way with multiple incomes coming in to support the household? That's super important.
That's great. Thank you for kind of laying all of that out, and I especially appreciate you kind of making sure we have our eyes open because there's certainly a lot of really exciting opportunities and policies that we want to see enacted and move forward, but at the same time, there's also some risks out there, and we need to be aware of what those are and think about how best to mitigate it. And so, Jason, if you don't mind, I'd love to kind of turn to you, and you're talking to NAHREP members across the country and with folks here in Washington. What else are you seeing in terms of on the risk side, and what are you watching out for? What are some, proposals or ideas that are out there you think maybe policymakers don't quite, understand or we need to do a little more education on?
Yeah, absolutely. So you hit on this obviously a little bit. I think as we were putting together our policy priorities, we were certainly really woken up by in terms of the full ramifications as we were talking through the implications of the lawsuits. Initially, it wasn't really even something that we were looking at. But as we go tomorrow, many of you are going to the Hill, right? I think it's very important that you go really with the top 3 points that you want to make, right? Because I think you have to be very concise on what that is. If you were to ask me, if I was to go out there when it's my turn to speak, because we have 4 major areas within that, and within that we have some subsections that you can kind of focus on. But number one, you hit on this, there's a tremendous opportunity because it is part of our demographic changes, right? And will continue to be for, as Latinos are driving entrepreneurship, the use of 1099. So this cash flow underwriting, I think is very important, right? Continuing to expand on that. It's something that's not going to go away. It's something that's going to be hopefully become much more prevalent. So how do we make sure that these individuals, many of which that you work with, many of you yourselves, right? That are in those situations, to make sure that financing is available to that. So I think the system needs to be prepared. Secondly, it is this whole issue around buyer side representation. So you can go about it 2 ways, right? You can either say, we're concerned about the compensation that we're going to get as professionals, but really it's more so about the buyer, right? Because we want to make sure that they have a independent representative, someone that's going to watch out for everybody should have their own representative. The seller, the buyer, everybody's vested interest, protecting their, in that process. And so as you're talking to people, like you said, all these different ramifications that are out there, but also thinking through, hopefully, those things don't change. Maybe, the cooperation continues, But what happens if it doesn't? Is the financing prepared, or is everybody ready to talk it through that? Because it's going to be a holistic change. It's not just one sector. It's not just going to be, there was an article that came out in Forbes last week, and it says, great news, buyers are going to save all this money. Oh, and I guess the only people that are going to lose are the realtors. That is completely false. That has nothing to do with commissions. That's a false narrative that's out there. Because as you know, and Gary's made the point to ad nauseum, that if in reality we were going to see prices come down, we've already seen it with this high interest rate environment. We know it is a supply issue. It is not the hard work that you do and the compensation that you demand. And so that's very important that you articulate that clearly, that you articulate that the consumer is going to be it's going to be affected. First-time home buyers are going to be affected, and access to this capital, right? And the final thing I think I would say is when we talk about the issue of immigration, it is still certainly something that in a bipartisan manner is very testy right now, but always going from the economic angle as we approach it here at NAREP, which is to say we believe that we have some strong allies when we talk about the economics and the impact to the supply issue as well, right? When Latinos make the overwhelming percentage of labor in the construction market, we need to make sure that we're pushing these employment-based visas and we have the right labor. That's what makes us competitive as a nation, is the ability to be able to produce this housing, to be able to have that. So it's the backbone of this whole situation, are the Latinos. So we're coming at it both ends. We're the buyers, but we're also the builders, right? This is where we're impacting the housing ecosystem.
Yeah.
So those are my three, I guess, key points.
Yeah, no, really powerful point. You know, housing is a really significant share of our nation's GDP. And when you think about the future of housing, we know, the stats out there that, the majority of net new home buyers in this country are going to be Latino. And to Jason's point, like, we're on both we're both on like the buying side, but also on the labor side. And so when we think about supporting Latino home ownership, it's not just about supporting our families and our community, which of course is very important. It's also about our country's economy. More and more, our nation's GDP and the health and vibrancy of our nation's economy is going to be reliant on Latinos and how we're participating in the housing market from the labor side and from the buying side. So it's a really critically important point. And I want to kind of spin a little bit off your point around the demographic shifts. So we know Latinos are younger population than other racial and ethnic groups. We're forming households at faster rates. So the demographic shifts of this country more broadly, but particularly around in the housing and homeownership space, are really going to make significant changes to our housing ecosystem. And so Sarah, I'd love to hear from you on what is FHA and HUD doing to kind of evolve with the changing demographics of this country so that you're serving everybody.
Yeah, I mean, I'm going to start with the positive rental history, and it seems when I say it's helping 5,600 borrowers who otherwise might not have qualified. That doesn't sound like a big number, but it is rare when you have policies that are actually expanding the pie, not just sort of shifting borrowers from FHA to conventional or conventional to FHA. And so along with, the cash flow underwriting that you were talking about, Kara, I mean, these are really important policies for actually expanding the pie. And for positive rental history, we see younger borrowers particularly helped by this new capability. I just want to hit on the, for younger borrowers, down payment assistance in the president's budget. Again, in the FY25 budget, we proposed a $10 billion down payment assistance fund for first-generation borrowers. And then on the extended household side, we know that all across demographic groups, we're seeing more extended households, in particular among Latino households. And so there's a couple of things that we are doing that I think are specific, are especially supportive. One, Kara hit on ADUs. We are continuing to refine and improve our ADU policies. We this fall rolled out the ability to count part of projected rental income on that ADU. We allow you to use 203K to fix it up and to count projected rental income. Excuse me. those are hopefully those should be very important to support this access to capital, where typically people are using HELOCs to build an ADU, and lower credit score borrowers simply don't have access to HELOCs. So we're hoping that this can be very useful. And then, of course, we have policies to allow, co-borrowers, to allow border income, and we are very open to other recommendations that you have based on your work in the field.
If I may for one second, because Sarah's being a little bit too polite about it, and so I'm glad to jump in here. One of the largest down payment assistance programs that's in the market today right now is student loan forgiveness. And under President Biden, there's been thousands of dollars of student loan forgiveness that's impacted the family balance sheet of virtually every family with children under the age of 45. So thinking about ways to improve your credit score, not only does paying off your student loan matter, but it also frees you up to actually become a renter, bring in new income, and save for a down payment or your future in any meaningful way. I just wanted
I appreciate that very much. And also, we've changed our underwriting policies so that borrowers who are participating in an income-based repayment program can count the amount they're actually paying instead of, assuming that they're paying 1% of a large balance. So I appreciate the point.
Great, thank you. So we have just a few minutes left. I do want to give Mike an opportunity, because you're doing some really cool stuff in local markets, and maybe you can give us a little flavor of some of the work you're doing locally, and maybe even kind of share a resource for if folks are out there and they want to be plugged into some of your more local work, where they can go to get more information, and then we'll turn to Jason to close us out.
Great. Well, I'll try to be brief because I know we're running right up against time. We recently launched a program called our Regional Pro-Housing Initiatives around the country, where we're focusing on a handful of states and cities around the country where there is an opportunity to move the needle when it comes to local housing policies and unlocking home ownership and rental opportunities. I mean, we think the fact is that for far too long, too many communities, too many stakeholders have not been included at the table when it comes to policy making. And so we're working intentionally to change that in places like Austin, Texas, in places like Oregon, in places like Massachusetts and Georgia. And so we would be happy to share more information through our partners to provide more of a flavor. But it's really, as much as we're talking about federal funding and federal policy changes, the rubber ultimately hits the road at that local level. And so there's a lot we can do that actually costs nothing in terms of sculpting better policies and creating both more affordable but also more equitable outcomes for communities. So happy to share more in conversation after the session.
Awesome, thank you. So Jason, I want to give you the last word here.
Good now.
Yeah.
So just one point. I think all of this can be fairly daunting, right? I mean, I don't understand, like Kara consumes an incredible amount of information what you're digesting, and it's very hard, right, to stay on top of all of this. Even I don't know how you do it.
I make it look easy.
Yeah, you certainly do. But I think as you're going out there, the best thing that you can do is to relate it to a personal example that you have, because in reality, all these policy changes eventually, when you connect it to those real experiences, so tomorrow as you're out there, please provide those personal examples. That's what our legislators need to hear, how it's impacting in their local market, like what you're doing, those stories there. So pick your area of focus, try to have a personal narrative around it, and make sure that you connect with them through your personal story. That's my suggestion.
Great advice, great way to close us out. So please join me in thanking our panel this morning. Thank you all for being here.